What's going on, guys? Welcome back to the channel. Today we're doing an analysis on Qualcomm. Now, this company was requested by Marquise. He runs the Redcliffe Investor channel. So without further ado, let's jump into the numbers. We're going to figure out what this company is doing right, what they're doing wrong, and what we should be paying for this company today, and if it's undervalued or not. Loading this up in the stock research app. For those who are new to the channel, this is a tool that I use to quickly screen companies to get the lowdown on what they're doing on the numeric side, because that's what's important to me. So the financial valuations category here ranks this company an 8 out of 10. That's a pretty solid score. So based off their cash flow statements, their income statements, and their balance sheets, they're getting an 8 out of 10, which means that they're doing a lot of things right. Let's take a look at what that means. So their price to earnings ratio on a 5-year average is currently 19.22, which is great. We want to find companies that have a price to earnings ratio of 22.5 or below, and they're well below that. And even in the trailing 12 months on the company metrics category, you can see that it's sitting at 10.39. For a tech company, that is extremely cheap. That is phenomenal. Current ratio is sitting at 1.75. That indicates to us that they have a lot of assets to cover the liabilities. The return on equity average, though, is where we are deducting a point. It's sitting at negative 37.31%. We want to find companies that have a return on equity average of 15% or higher. But the silver lining with this, though, folks, if you take a look again at the company metrics, their trailing 12 months is currently at 88.12%. That is a phenomenal, and that's a huge percentage change and a huge leap. This is somewhat forgiven. They may have changed the ship around, so to see that astronomically high number is much appreciated compared to this negative disaster here. As well as their EPS growth is up, so that means that their earnings per share has been increasing over the last 5 years. And you can see that's evident here. Currently, it's at 11.51, and on the 5-year average, it currently has been sitting at 4.88. The debt to equity, though, that's another little red flag. We want to see companies have a debt to equity ratio with 50% or lower. That would indicate to us that they're leveraging their capital through equity for the shareholder and not taking on debt. And as I've been pretty much repeating myself in a lot of my videos, in high interest times, in high points where a recession is pretty much inevitable, we want to find companies that have low amounts of debt, because revenue is bound to decrease, unemployment's about to increase. They have to be able to weather the storm. You bring it back to the financial valuations here. Green across the board in the second half. Share dilution, it means that they're buying back shares, which is great. The net income is up. The free cash flow is up. The return on invested capital is extremely high, sitting at 26.95%, and the revenue growth is up. This company is doing a lot of things right. Marquise, phenomenal choice, man. I gotta say, I've been wanting to look at this company for a while, and you brought it up. I said, you know what? I'm gonna do it today. I'm gonna do it today and take a look at it. So currently, it's at $119.78. It hit a low of 101.93 and a high of 193. So okay, so we're getting this company pretty much on the low end. But what's it actually worth? In this software here, and if you want to get your hands on this software, folks, follow the link in the description box below. You get a 7-day free trial. It comes with this magical little number, the price analysis section, where you can do 3 different assumptions and do up to 20 years of analysis where we can find the intrinsic value of this company. I'm going to fill out these lovely boxes using the historic numbers that the company has shown us. So you know what, I'm going to just fill this out pretty quickly here, and we can discuss it and why I think it might be priced at a certain point. So with my revenue growth numbers, I've seen 16 over here and 7 on the low end. I think I'm going to go with some conservative numbers and go 10, 12, 14, somewhere in between my 10-year average numbers and 5-year average numbers. Profit margin, I think they'll be able to do the same thing with their 5-year and 10-year. So you know what I'll do? I'll do 15, 16, and 17. And same thing with the free cash flow margin, sticking with the 5-year and 10-year numbers. I might just give it a little bit of a haircut. I'll go 20, 21, 22. Price to free cash flow, sitting at 19.67. I'm going to do my lucky numbers at 14, 16, and 18. PE ratio, so the price to earnings ratio that I believe is going to be at the end of the 10 years. It's currently at 10.39. I can't believe it's going to be trading that cheap forever, but for the sake of argument, I'm going to just go 10, 11, 12, super low PE ratios, as well as a desired return of 13% going forward. And let's see, calculate, and it's gonna spit out a number what we should be paying for this company today. if we believe this is what's going to happen over the next 10 years. It's a lot of numbers to crunch. We're going to get 9 different calculations. I'm shook. I am shook. I was not expecting that, to be honest. Guys, take a look at this. It's actually very surprising. So current price is $119. Average calculation comes out to be $258.33. And I'm using fairly conservative numbers. I mean, the only thing I really kept the same was their free cash flow margin. But look at this PE ratio, super low. Now, here's where I like to try to think, okay, what is the minimum that this company has to grow by year over year? So I'm just changing the revenue growth numbers just so for those who are following along. Wow, this is a steal. This is a steal. Qualcomm is looking pretty good. Just to finish up my other point, if you don't know, they're a semiconductor company. They make phenomenal chips. If you owned a Samsung phone at once in your life, they make the Snapdragon chip, and pretty much their chips have been made by Taiwan Semiconductor Company. But take a look at that, and 7% revenue growth over the next 10 years. You can buy this company at, okay, well, their earnings multiple calculations hitting the red, but on average, you pay $136 for this company. That is a steal. And that's nothing for what they've done. Look at that, 31% revenue growth over the last year, year to year. 16%, 7% on average. And that is when they were a smaller company. When did they go public? Yeah, well, this is going back to 2013, so 10 years ago. Wow. Wow, this is a steal. I'm going to do a lot more research on this company. The numbers, though, are screaming out to me, and it makes a lot of sense. But does that mean to go out and buy Qualcomm today? Even though I'm excited about this number, there's still some more digging to be done. However, from a numeric side, I'm excited about this company. To be honest, I wasn't expecting these numbers to be sped out as much of a discount as it's currently at right now. So what am I gonna do? Well, I'm gonna use my software and go dive deeper and let's see how this company has been performing against SPY out of curiosity. Well, I'm liking that their free cash flow, first off, against their earnings per share is actually pretty parallel. We want to see that. Dipped a little bit in 2018, but I digress. Shares obviously decreasing. Their assets versus their liabilities. Yeah, so it's good. Their assets have been increasing over the last little while, like that. Their liabilities have been pretty much consistent. So Qualcomm, interesting pick. If you want to see a company analyzed, write it down in the comment section below, or better yet, get the software and do whatever company you want. We have every company across the NASDAQ, the Toronto Stock Exchange, Euronext markets. So what are my thoughts on Qualcomm? To keep it brief, the numbers make a lot of sense. I think it's undervalued numerically. They have strong balance sheets. However, I really gotta investigate the CEOs. I really gotta investigate the board of directors. There's a lot more deeper research. Even though the numbers make sense, and I understand what the company does, you have to do your due diligence even further. That's just for myself. But as it stands now, undervalued. Anyways, folks, that's the video. Thank you so much for watching. 175 average calculation for Qualcomm, where it's currently trading at $119. What do you think about that? If you've done your research and you're hovering on whether you should buy it or not, that might be the piece of evidence you're looking for. Anyways, folks, I will see you in the next one. Thank you so much for watching.